Welcome back to the channel, everyone. Today I've got some great news about the AMC short squeeze. Now, you might not know, but there's currently a lot of malpractice being hidden within the AMC option chain. This malpractice was discovered in GME's option chain back in January and is happening right now for AMC. Trust me guys, you do not want to miss this video. So stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to the 900 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel if you haven't already, and ding that notification bell, because that way you won't miss another video just like this one. Now I want to dive straight in with the key information. So, if we have a look at the option chain for the 16th of July, we can see that there's currently a lot of open call option interest. 42,000 open interest here, 29,000, 24,000, 22,000, 16,000, a huge amount of call open interest going on right now. But what most people aren't looking at is the put options. And if we filter the open interest for the put options, we can see that actually there's way more put option open interest going on right now than there is call options. That's crazy. With pretty much every single broker, we've seen AMC dominating the most traded stocks list. And usually the call to put option ratio is always higher for call options. There's always been more people buying the stock than there has been selling the stock. But that's because there's a lot of malpractice hiding within these open put options at the moment. If we start by having a look at this post on Reddit, that outlines that there's currently 449,613 put options expiring in 11 days out of the money. That's why there's currently so many trolls, so much FUD being spread by the media, and the Hedgies are really trying to make a last-ditch attempt to scare away the long investors, the apes, because they've got so many put options expiring out of the money. But what is that malpractice that's being hidden within the AMC option chain? Well, this post here says attention. Here's a research template to expose the naked shorts in AMC. Hedge funds have been using the married put approach. Deferred, i.e. kicked down the road to avoid buying or covering approximately 79 million GameStop shares that it shorted in January of 2021. Evidence shows that they kicked the can down the road 1, 2, 3, 6, 12 and 24 months beyond January 2021 at various option expirations. Now, someone has actually done the research and expanded on this much more for AMC. The basic idea is you can see how many options are open by looking at the open interest each day. If it goes up, then more options have been opened. With GameStop, there was a huge spike in late January 2021 when short positions started closing. But they then had the realization that a short squeeze would kill them, so they started rolling those shorts out in time using married puts. Just in case you don't know what a married put is the name given to an options trading strategy where an investor holding a long position in a stock purchases an at-the-money put option on the same stock to protect against depreciation in the stock's price. In terms of how this links into naked short selling, in a married put, a short seller rents the option market maker's exemption from the locate requirement to create the economic equivalent of a short sale. Rather than pay a broker to borrow the physical shares, in this case, the short seller pays the option market maker a premium that is the de facto rent payment in exchange for access to the market maker's exemption to the locate requirement. Here's an example. Basically, the short seller buys the underlying stock from the option market maker. Because there's no shares to sell or no shares to short, the option market maker has to create some naked shorts. The option market maker then writes the put options and the short seller buys those put options. So the short seller owns puts, which is just a bet that the stock is going to go down, and they do also own the shares. However, those shares have only been created because the option maker couldn't locate any shares to sell, so they had to create some naked shares or some naked shorts. After the married put is executed, the short seller then sells the shares into the market, those naked shares or those naked shorts, those created shares. Every time the short seller sells a share, his net short position increases due to the decreasing long position in the GameStop stock or the AMC stock. The end result that he is long puts on GameStop or AMC, which is equivalent to being short. So not only have shares been created that don't exist, as in naked shorts have been created to sell to the seller because shares couldn't be located to sell, those shares, those created shares have then been sold into the market. And the short seller also then still owns put options as well, which is just another bet that the stock is going to go down. So we've got a huge mix up here of fake shares, fake shares that have been sold into the market to unsuspecting people, and put options that are all hidden within inside the option chain because they've been largely created by the option market maker. To prove that, the poster has looked at the open interest for put options between May and June. AMC had a huge spike at the beginning of June. If we back up a week to May the 24th, we can count up the deep out the money put open interest and compare that to open interest after the spike on, say, June the 14th. The difference there is 109,000 new options opened up at essentially worthless strikes, so these options are almost certainly being used for married puts to hide share deliveries and circumvent failure to deliver reporting. You can see that many of these share deliveries were pushed out to a short time to July and August, as in 2 to 3 months' time, where many others went out as far as January 2022. They're basically hoping AMC apes give up and paper hand their shares before then. We can see here that a massive put option open interest of 80,000 options is only at a $20 strike price, which expires in 10 days' time. And you and I both know that there's no way that AMC falls to $20 in 10 days' time, and therefore this open interest is largely hiding naked shorts and married puts. Again, the remainder of these massive open put option interests are at the $25, the $10, the $15 strike prices. And we know those strike prices are just never going to happen. I personally think it's absolutely incredible that the hedge funds are stooping to these lows in a real last-ditch attempt to try and scare the apes into paper handing and selling their shares. Not only are they naked shorting, but they're also trying to hide it inside the options chain. I just wanted to quickly go back and touch on a question that I had a lot in one of my other videos, which was what happens now that AMC is on the threshold list? Will those threshold list rules really be enforced? Well, CHPT was on the list from the 19th of March to the 1st of April and experienced a 41.49% improvement within 5 trading days after being removed from the list when those failure to deliver positions had been covered. SEMR was on the list from the 12th of April to the 16th of April and experienced a 33.31% price improvement while actually being on the list. IPOE was on the list from the 13th of May to the 28th of May and experienced a run-up of 35.27% while on the list. As you can see from these examples, a run can happen while a stock is on this list or very soon after a stock leaves this list. If you take the average of these 3 stocks, you get an average of 36.69% price increase. If you apply that percent increase to AMC at our current price of $52.91 a share, you get a price of $72.32. Guess what? Our all-time high during regular trading hours was $72.62. Therefore, the AMC stock being on that threshold list could actually cause the AMC stock to run up past those previous highs when those failure to deliver positions are eventually covered. However, it wouldn't surprise me if the hedge funds somehow find out a way to circumvent the rules of the threshold securities list because they are so sneaky. And therefore, I don't want to put a time deadline on the AMC squeeze and say that it's guaranteed to happen after the 14 days on this threshold securities list. I'm just pointing out some catalysts that could cause the AMC stock to squeeze. Guys, if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading platform, be sure to check out the links down in the description below to get some free shares whether you're in the US or in Europe. You can currently get 2 free shares worth up to $2,300 with Webull at the moment if you're in the US, and a free share with free trade worth up to £200 if you're in the UK or in Europe. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!